Hello and welcome to Business on the Wire. I'm Mitali Mukherjee. In 2020, after a gap of over 9 years, gold hit that psychological mark of 50,000 for 10 grams. So, what's making gold shine brighter than ever? And is this the right time to invest in it given the state of our economy? Let's talk a little bit about what's been happening with gold over the last few years. It hasn't been a one off for this precious metal. In 2019, gold prices rose by 25% on NCX. The year before that, it was a more modest 6%. But COVID has changed everything. Gold has always been hugely popular in India, we're the world's second largest gold consumer after China. So, weddings, investment, legacy, Indians have been proud to own and buy gold for centuries now. But the price rise isn't up to us. That's dictated by international gold prices. In fact, globally, the yellow metal has been on the rise and even picked up pace for various reasons. It ranged from sharp losses on the US dollar in America, more and more stimulus measures by different governments across the world, and of course, a very healthy flow of money from interested investors. The biggest reason for this surge, though, is gold's perception as a safe haven. And what is that, you may ask? Well, a safe haven is an asset that holds its value in extreme or very unexpected events. So, the qualities attached to it include a guaranteed return, relatively stable prices, and more importantly, the ability to go against the trend. So, simply put, in an environment such as the one we're going through today, the COVID pandemic, huge economic uncertainty, volatility in other investment options like the stock market or real estate, for example, gold becomes a safe haven. It sees its prices rise when other investments suffer extreme losses. Of course, there is the risk that prices may also fall when uncertainty actually reverts to more normal levels. There's another factor that's going for gold actually. The supply of gold has been extremely modest. In fact, it's been increasing by some reports by approximately 1.6% per year over the past 20 years. That's the data available at this point. So you have an investment that's stable, it's highly liquid, as in it can be bought or sold at any time, it carries no credit risk, and it's quite scarce, which ensures that its value is actually preserved over time. Which raises the two most important questions. Will prices go higher, and should I buy gold now? On the first, regarding prices, many analysts have revised their price targets to 65,000 rupees per 10 grams in the next 18 to 24 months. Some fluctuation has, of course, increased with prices on a daily basis, but gold watchers believe that with lower interest rates, large amounts of liquidity, at least till a vaccine is found for COVID, prices will remain quite strong for gold. The second question, should you buy it? There's a bunch of ways to purchase and invest in gold. You can buy physical gold, of course, but that's not always easy. You could also invest in gold ETFs, or exchange traded funds as they are called. And with prices on the rise, investors also see gold at this point as a key portfolio hedging strategy, which means that if other prices of your investments fall sharply, like that there's an unexpected stock market crash, gold remains relatively stable. In fact, a World Gold Council report observes that the combination of high risk, low opportunity cost, and positive price momentum actually looks set to support gold investment and offset weakness in consumption from an economic contraction itself. The traditional wisdom amongst financial investors or advisors in India has always been that gold should occupy at least 5% of your total investment pie. In this environment, though, perhaps that becomes a little bit more. But the tricky part remains the environment we live in. Physical gold dealers in India were actually offering buyers pretty sharp discounts amidst very weak demand. That got further dampened with the start of the Shraddh period in many parts of northern India and western India that's considered inauspicious to buy gold and other assets. Of course, there's other data to balance off with that. Gold demand in India usually picks up in the run up to this October November festival season, but dealers are worrying that this time round, with a worsening COVID-19 outbreak situation and, of course, an extremely weak economy, they may not see the usual jump in buying. However, other spaces have picked up. Balance that off with this piece of data. The World Gold Council again reports that investors added 959 tons of gold, that's worth $60 billion in gold ETFs so far this year. This is, of course, global data. In August and so far in September, ETFs did see net inflows actually come down a little bit to just about 39 and 21 tons. And that interestingly coincided with gold's first two monthly price falls since March. Renowned investor Warren Buffett said of gold that it gets dug out of the ground in Africa or someplace, then we melt it down, we dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars, he said, would be scratching their heads wondering what's going on. Perhaps it's time now for the Martians to watch this commodity find its sparkle. I hope this has been an interesting chat around gold for you. Thank you for watching.